YouTube, what it do? It is your boy Young Soros here, back with another video. And in today's video, there is a lot that just happened over the last 2 days. You had Jerome Powell, you had him saying interest rates are going to be higher for longer. You have the bond market exploding. TLT, stock market's about to, man. Let's jump right into it, starting with the SPY. Now, we just closed below 430 or close to 430, near 429, meaning that we are at a level where if we take a look and zoom out really quickly, we are at a level where we can easily free fall and go all the way back to 410, maybe 420. Once we break out of this range, we could easily free fall all the way back down here to the 410s. We may stop around 420, but if things get really ugly with the bond market and the yields as well as the dollar, then we are for sure going to see some carnage within the stock market. Jerome Powell came out 2 days ago. He signaled to the bond market and to the stock market, hey guys, we're raising rates. We don't care. There's still a couple rate hikes in the table. And on top of all that, they're keeping rates up higher, and they're going to keep them up all the way until 2025, 2026. So keep that in mind. It is getting pretty wicked out here, and if Jerome Powell keeps this attitude up, he's going to bring the market all the way down beyond October lows. And if we take a look at the bond market, the 10-year yield breaking out. TLT broke the October lows of last year. So that is really spooky, considering that we just had a banking crisis this year and the yields were way up here. So keep that in mind, guys. In March, the yields weren't even that high. And if you just had a banking crisis with 3% yields, imagine if they rip all the way to 5%. That's where we start getting into the land of the unknown, and that's where things really start to break, and that's where Jerome Powell is either going to cave or he's going to keep this attitude up. But most likely he's going to cave when something breaks. It's just a matter of when something breaks. It's not a matter of what anymore. It is a matter of when things will break. Keep that in mind. You also have the dollar. He is starting to break out. Now, energy, however, he is staying calm for these last 2 days, which is good because you don't need all this extra volatility with energy and things like that. Because once the stock market gets all this bad news and you just see energy start soaring higher, then you're easily going to go back to October lows if oil decides to rip up higher, and that is a signal for more inflation to come. Now, let's get into what Jerome Powell actually said with the dot plot. And as you can see here, he doesn't expect unemployment to drop at all. He thinks unemployment is going to stay the same all the way until 2026. Is that realistic? No, it is not. What Jerome Powell is trying to do is he's trying to put a blindfold over everybody. He doesn't want the bond market to know what he is going to do next. He is basically trying to create a smoke screen for everybody involved. He doesn't want anybody to know his next move. If you think unemployment isn't going to rise within the next couple of years, I hate to break it to you, but you're a little behind. So unemployment is most definitely going to rise above 4.5, and for sure it is going to rise above 5% easily. Now, the reason why Jerome Powell did this in the summary of economic projections, because if you take a look at the dot plot, now there are members of the Fed that expect rates to be almost at 6%. This was not a thing the last summary of economic projections. You had a couple of Fed members up here, and a little bit down here, but now the dot plot is more spread out. And what that means is that a majority consensus says that, hey, we think the bond market, you're wrong, and the rates are going to be at 5%, 5.5%, and we're going to keep them there, and then we're going to slowly release them 2024, 2025, and so on and so forth. Now, with that being said, the last summary of economic projections, it did not look like this at all. You had a couple of Fed members saying that the rates were going to be way lower, way down here. But now a majority of Fed members saying 2023 there's one more rate hike with on the table, and now the dot plot is more spread out. That is bad news for the stock market, and that is bad news for the economy, because if he keeps the pressure with these interest rates, something is going to break. It is almost a guarantee that something is going to break, and Jerome Powell is hoping that something will break so that way he can release the pressure and cut rates. But he doesn't want to signal that just yet, because if he signals that he's going to cut rates, everybody's going to jump on the bonds, and all the work that he just did would be for nothing. So he is trying to create a smoke screen with all this sort of stuff. And with the dot plot, you don't know who is voting on which. This is every single member on the Fed. So you don't know who's voting for what interest rate. It could be anybody. Just could be Jerome Powell right here. Jerome Powell could say 6.5% interest rates, or he could easily be like, well, we're cutting interest rates all the way to around 2% in the longer run. That is not good, guys. That is not good. You don't want to see these rates this high. Now, I do commend Jerome Powell for trying to fight inflation, but at this point, it is not a matter of Jerome Powell fighting inflation anymore. It's about him getting credibility back from everybody after he unleashed the money printer in 2020, and it damn near gave us hyperinflation. So he is the cause of all this stuff going on, and now he is trying to fix what he started and gain his credibility back, but it is not working out too well. If you take a look at the yield, they are exploding higher all the way. It hit a high of 4.7. Insane. Now, if the yields keep going like this, if the bond market keeps breaking and it goes higher, they have no choice but to cut rates. Something is going to explode soon. The stock market, something. Now, with that being said, there is no way in hell that unemployment will not rise above 4% within the next 2 to 3 years. Keep that in mind, guys. He is trying to confuse you guys. Don't get fooled. Do not get caught up. And this is alarming because if we take a look at the bond market, 305 trading days. It has been almost 14 months, 15 months of an inverted yield curve. That is the longest stretch in history. Like almost the longest stretch in history. Last time it was this long was 1978 into 1980. And with the yield curve being this steep as well as this long, that is not a good sign. If we even take a look, the yield curve is an extremely, extremely accurate predictor of recession. So to say that unemployment isn't going to rise and we're not going to have a recession and everybody's riding off the yield curve is beyond me, because it even predicted the COVID recession. Yields dropped and they dropped just below here, inverted, and then uninverted. Next thing you know, boom, recession. Now, let's keep going back. Let's go back a little bit. Boom, 2020 recession. Yields invert, uninvert, boom, 2008 recession. All right, next one. 2000 recession. Yields invert, uninvert, boom, recession. The yield curve is extremely accurate in predicting these, guys. Invert, uninvert, boom, recession. And it go on. It's been like this ever since it came out. Invert, uninvert, boom, recession. Invert, uninvert, boom, another recession. So the yield curve is nothing to be played with. If you see the yield curve invert, you better prepare for a recession. Guaranteed. Now, the longer and the steeper the yield curve, however, though, the more severe the recession is. And this is pretty bad so far. And if Jerome Powell plans to keep these rates extremely high and for extremely long, we could see the yield curve being inverted for almost 3 years. And that is insane because not only is there a lag between when the yield curve inverts, but when it uninverts into the recession, there's a lag after it uninverts too. So you got to keep that in mind. This is going to be a bad economic calamity coming forward, guys. And I would like to think that the Fed has everything under control. And I would like to think that, everything is going to be fine, guys. But if you take a look at what is going on currently and what Jerome Powell just signaled to the bond market and what is going on in the economy, things are not looking good. They may be looking good now, but it's one of those things where it's all good until it isn't all good. You're not going to see anything. You're not going to see the explosion until the explosion happens. So you got to stay on your toes and you got to stay vigilant. Just look at China. China is ahead of us in terms of China is ahead of us economically, meaning they're already going into their economic downturn, possibly a depression. And if you look at their numbers, it is god awful. Now imagine a superpower like China in terms of their economy being that bad. Do you think the US can withstand what is going on in our economy as of now? I don't think so, especially with the government shutdowns coming up, especially with if yields start rising higher. Debt in our country, especially the government debt, it is getting really bad. And if Japan starts selling off more of our bonds, the yields will keep exploding higher. And if the Fed wants to play tough guy, keep these rates high, it is going to be a scary sight to see. And I'm not even going to mention anything about real estate and the real estate market, because even though the real estate market is slowing down somewhat, it is still at 2020 2021 highs. Think about that for a second. 7% interest rates, 2020 2021 highs. Now imagine if that domino falls, and it takes a minute for the real estate market to catch up to everything. And things are already looking bad now. So keep that in mind, guys. You got to stay on your toes. You got to stay vigilant. I hope this helps, guys. And with that being said, guys, it's not looking too good right now. SPY is on its way to a free fall as we speak. Jerome Powell came out and he basically said, whatever y'all got going on, we don't like that, and we have been falling ever since. Could we go back to October lows? Most definitely. We are going back to October lows. Will it be now? No, it won't be now, but in near future, you are definitely going to see the stock market get a little jumpy and the volatility will be crazy. And you even saw the volatility today. Just look at these big swings within the stock market. So the volatility is picking up at an extreme rate. And with that being said, you also have the bonds hitting new lows. I mean, it bounced up today. It may fill this gap down here to try to fill this gap and then turn right back down. And if that happens, Houston, we have a problem. The bonds are going to go all the way to $80. And you don't want TLT to be that high, that low, and you don't want the 10-year to keep going and the 2-year keep dropping. We don't want to see the yield curve steepen. We want to see it uninvert. And depending on how quickly the yield curve uninverts, it could be a good sign that the recession is here rather than down the road. The more the recession is prolonged, the greater the recession will be. And just look at where the yields are coming from. This is a huge drop from the bond market. This is an insane drop, and it wasn't really doing much once it bounced off of these October lows, stayed in this channel. But now that we're breaking out, it is definitely looking real spooky. I'm definitely going to be shorting the bonds again once they bounce back up a little bit, catch some relief. I'm definitely going to be shorting the bonds again, because if Jerome Powell sticks to what he says, the bond market is going to fall. And that's not even talking about the dollar. Once the dollar starts, doing its thing because of Jerome Powell, that's where you will start to see the bond and dollar, circulations start to continue. They feed off of each other. So dollar rises, yields go higher, they start to feed off of each other, and then once that happens, things will start getting destroyed. First thing being the stock market, but he's a little bit jumpy. It takes time for him to move. And the bond market right now, it is in danger. The bond market is on the edge of a cliff. The stock market, it's in a free fall. We close at these lows, it's not looking good. And if we break 430 going into Monday, and then coming into October, which is one of the most volatile months of the year, we are going to have some problems. Now, seasonality speaking, we could have a bounce in the SPY going into the end of the year, but if we don't even get a bounce with the seasonality going into the end of the year, watch out for new lows coming into 2024. So, you gotta keep that in mind, guys. You gotta watch the bonds. You gotta watch the stock market. You gotta watch the dollar. Oh, and don't forget Japan. You also gotta watch Japan because they affect things too. So, with that being said, guys, you gotta stay ready, stay vigilant, all right? There is a lot going on within the economy, government shutdown, debt, all that sort of stuff. Don't get caught up in the smoke and mirrors, guys. Jerome Powell right now, he is trying to buy time. He is throwing smoke screens. He doesn't think unemployment is going to rise. And if you can see through the smoke, you will know exactly what to do. Do not get caught. Do not get caught, guys, because that is Jerome Powell's main plan. He wants you to fold. He wants you to be confused. Do not get confused. If you know the game plan, you will not be confused, guys. Just know the bond market right now, it is in big trouble. So is the stock market. And if you want to survive, you need to stay on your toes, guys. So that is it, ladies and gentlemen. It has been a jammed-packed week. I am going to go over more in depth about the yield curve in the bonds coming into next week. And if they, catch a relief, then I'm going to be re-entering a short once again. I tried going for the long off the October lows, and I got burned a little bit. And Jerome Powell, he says, all right, let's get it then. I'm shorting the bonds once again. So keep that in mind, ladies and gentlemen. But that is it. I hope you guys enjoyed. I hope this was informative. I hope you got some value out of this. So do what you will. Just remember, play it safe, play it by ear. Don't get caught up in the smoke. Be patient, and the play will come. Just be patient. You got to wait these things out. There is a lot of things affecting a lot of things right now. It feels like nothing is moving, but everything is moving at the same time. If you can just stay balanced, you will be straight. But that is it. I hope you guys enjoyed. Young Soros out.